CBN to ease off interest hikes. Nigerians have had to contend with an increase in prices of goods and services since the Central Bank of Nigeria raised interest rates for businesses. However, to address this inflation, the CBN hinted at a potential slowdown in interest rate hikes, which has sent ripple effects through the Nigerian economy. This was according to the CBN governor, Dr. Olayemi Cardoso, who noted that the institution will slow down interest hikes in the no distant future. Now, no distant future in central bank speak could mean anything from next week to even next year. Cardoso made this statement on Saturday in Lagos at a book launch, saying, "Once you do not tame and control inflation, you get into hyperinflation. It takes you several years to get out of it. Once you enter hyperinflation, the transmission of monetary economic tools will become completely ineffective. It is important that we avoid that. That will be as long as we can control and can reverse galloping inflation. Once we can do that, then we maintain." Let us discuss the ripple effects of the CBN's mandate to ease off interest hikes. Number 1, more jobs. Slower interest rates are like easing off the brakes a bit. Businesses might be more likely to borrow, invest, and create jobs. That sounds good, right? Now, more jobs, more money flowing around. But wait, there's a catch. If the CBN eases off on the brakes too soon, inflation could start rearing its ugly head again. Remember the 3 pieces of tomatoes that cost 1,000 naira last month? We don't want to relive another nightmare again. Number 2, investors might be discouraged. The other thing to worry about is the exchange rate. Lower interest rates could make Nigerian investments less attractive to international money bags. That could weaken the naira, making your hard-earned cash buy even less at the market. Number 3, improved customer spending. With cheaper credit, consumers might be more inclined to take out loans for cars, homes, or other big-ticket items. This increased spending power can boost demand for goods and services, leading to higher business profits and a stronger economy. Number 4, stock market uptick. Lower interest rates can make stock a more attractive investment compared to fixed income options like bonds. This potential influx of investor capital could boost stock prices and benefit businesses seeking to raise funds through the stock market. Now, the potential challenges. Number 1, inflationary risk. While the CBN aims to control inflation, easing interest rates too soon could reignite inflationary pressures. Careful monitoring and adjustment to the policy might be necessary. Number 2, exchange rate fluctuations. Lower interest rates could make Nigerian assets less attractive to foreign investors, potentially leading to a depreciation of the naira. The CBN may need to implement other measures to stabilize the exchange rate. Number 3, access to credit. Even with lower rates, access to credit might remain limited for small and medium-sized businesses, SMBs, due to stringent lending requirements by banks. Policies aimed at improving access to credit for SMBs are crucial. Finding a balance. So, what's the CBN going to do? Well, they got to find that sweet spot, that perfect balance between keeping inflation down and letting the economy grow. It's a tricky walk, but hey, the CBN governor is a brilliant man. We got to trust them to steer us in the right direction. The CBN's potential shift on interest rates presents both opportunities and challenges for the Nigerian economy. While it could spur growth and investment, careful management is necessary to avoid reigniting inflation and currency depreciation. By closely monitoring economic indicators and adapting its policy as needed, the CBN can navigate this transition and steer the Nigerian economy towards a more stable and prosperous future. So, follow @officialconga TV for more content.